Okay, so now let's try to understand about subsequent collection from accounts receivable, which is like in many cases what happens that you have return of your debtors or accounts receivable, and after return of they come and pay you in a good faith. So let's take the example of Best Buy, which has previously written off $2,000 receivable from a corporate customer as uncollectible. Now that customer comes back and unexpectedly pays the full amount of $2,000. So if your company was using direct write-off method, then recovery will be treated as revenue because this is unexpected. So simply you will write it like $2,000 as cash because your asset is increasing, cash is increasing, so you will debit that and record this 2000 as unexpected collection or unexpected accounts recovered. So this will go to your revenue directly. Now, if your company was following allowance method, then what will happen? Then you have to reinstate the receivable. When I say reinstate the receivable, which means when you have return of your bad debt previously, you have made this entry allowance to AR for 2000 because you knew that these debtors won't pay you, so you credited your debtors or AR by 2000. Now you have to reverse this entry because now you have recovered the money. So firstly you will make the accounts receivable in debit from this credit and this allowance to credit, which is allowance for uncollectible. Okay, now what happened? From these $2,000 of receivable you received the money, right? So now these debtors will be reduced, so these debtors are credited in the next accounting entry, you need to reduce that, and from these debtors you receive the cash, so you have debited your cash. So finally cash is debited and account receivable is credited here. So this is the allowance method which is being used. Now what is the key point here? So the key important point is like in direct write-off method your revenue increases as you saw, but in the allowance method recovery restores the allowance. We saw that when recovery was done, then this allowance was restored meaning allowance is a credit account, so this has been credited again and reduces the accounts receivable without affecting the revenue, and you receive the money from your debtors, so that has reduced your accounts receivable. But overall whatever entry you have passed before, you need to reverse that here, which we had seen and try to understand.